mandate for the Fed is very clear as it relates to prices, as it relates to employment, and as it relates to financial stability. And while the institution can be more biased towards the dove side or towards the hawk side, that is distinctly possible. It's happened in the past. It can happen in the future. But the integrity of the institution, we think, is very much in place. And we are expecting slightly more dovish policy, but we don't think that's a cataclysmic outcome for the Fed.
Okay, so Kurt, there's plenty of catalysts for 2026. Clearly, who's going to lead a Fed? And you mentioned the One Big Beautiful Bill and really making its way through the economy, the Supreme Court's decision on IEEPA tariffs. Also, I guess there's a possibility, however remote it might be right now, that we could get another government shutdown, putting into question all the things that we are expecting from the government and how they move forward.
So which one's most important?
Yeah, how do you think about that?
Well, I think the possibility that the government runs the economy a bit hot next year is something I'd be on the lookout for. If the government has to pay back $140 or $150 billion in tariff revenue, that's good for the companies that receive it. It's bad on the deficit front. Could lead to a modest steepening of the yield curve. But what I want to see is whether the Fed is cutting rates not just into neutral, further into neutral territory, but if they actually go to the point of easing monetary policy. A quarter-point move is what we have penciled in for next year. Much more than that, I think it has to be justified by the data, but for right now, it's sort of this Goldilocks picture. It's, inflation tops out, starts to move lower. GDP is, kind of in that 2% range. It's not too bad. So anything that can kind of manipulate that into maybe a worse outcome is I think that's where the market risk is. You think about corporate credit.
Yep.
Most of that is just in the risk-free rate. Credit spreads are tight. So I'd be thinking about just, where we are within the bond market, risk positioning, and so forth.
All right, Kurt, really appreciate your joining us today. Kurt Ryman is head of Fixed Income Americas at UBS Global Wealth Management. Our thanks as well to George Bory, Chief Investment Strategist of Fixed Income over at Allspring Global Investments. Now, we talked about corporate credit. Up next is the auction block. This year's U.S. high-grade debt sales have been the busiest since 2020, totaling more than $1.5 trillion. Credit is up next on Real Yield.
Excellence takes drive, work, perseverance. Tiger Woods brings it to the course. Insperity brings it to your business. Want to be the best? Work with the best. Insperity, how HR matters. Learn more at insperity.com/tiger.
What happened?
Some bad people tried to hack me with sad affirmations.
Sad, Craig?
No. We're protected.
AT&T Dynamic Defense help protect us because small businesses need us.
So he's not sad. Guess we don't need these.
I think we do.
It's fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays.
Some people travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
I'm Scarlett Fu. This is Bloomberg Real Yield. It is time now for the auction block, where we highlight notable credit issuance for the week, the month, and the quarter. We start in U.S. high grade. With the holidays ahead, December is pretty much wrapped up. It finished as the slowest month for issuance in 2025, but as I mentioned, this year's $1.585 trillion of capital raising is the highest since 2020. Over in high yield, one notable deal landed to close a year that saw the busiest supply since 2021. Flash Compute. This is a company indirectly owned by the crypto miner TeraWulf and cloud computing startup FluidStack. Priced $1.3 billion of 5-year notes. It drew orders of more than $4 billion. The debt is being used to fund a data center linked to Google. And when it comes to M&A, companies are rushing to the bond market for funding, sometimes even before the deals are even completed. That's made this Q4 the biggest in 4 years for acquisition financing globally. Sticking with credit, one portfolio manager at Morgan Stanley is focused on high quality as AI-related debt deals boom.
We think that, some of those deals, those AI data center deals, they've come out. We haven't invested in them because you just don't get the upside like you do on the equity side of things. We're bond investors. We're trying to get back par on our investments. And if you're getting these deals coming at 200 or 225, it doesn't make as much sense. There's still plenty of other places to find value, and spreads are still at the kind of wider end of the last decade there. So you don't have to be cute with these markets. You can kind of just hide out in the high quality space for now, and then wait for these opportunities to develop out the credit risk spectrum.
Joining us now for our credit roundtable is Patrice Altanji. She is head of debt capital markets at HSBC Americas, and Rashawn Reed, co-head of global fixed sales at Bank of America. 2025 largely over when it comes to issuance. There was that deal with TeraWulf and FluidStack. Rashawn, talk a little bit about what these last few weeks of December look like for you as banks line up debt deals for January when the floodgates reopen.
Yeah, and nice to see you, Scarlett. Thank you so much for having me. Listen, I think when you think about where we've been, particularly, I'll do two tails. So the IG market, if you look at where we've been in terms of spreads, we've some, when you also look at the high yield market, and you see where we've come from this year, where we've seen highs and lows, the peaks of about 200 basis points. We also are expecting about 13% of issuance increase. So the market is shaping up pretty well. I think the calendar is looking pretty robust, and I think across both sets of markets, particularly in the IG space with the AI story, we're going to see an uptick in supply for next year.
Yeah, that's been a very persistent theme all along, Patrice. What does demand tied to AI infrastructure look like in 2026 versus other sectors?
That's a great point. I mean, we have seen, when you look at demand, we just did a huge investor survey, and where investors want to park cash in 2026, tech was the #1 industry, followed by banks, and then the healthcare space, and then industrials and energy were 4 and 5 for that part of the survey. So there's very huge demand. And when we look at the Bloomberg Index and sort of take apart the Bloomberg Index, if you look at tech as a percentage of it, it's really in the single digits, whereas you have financials at 30%, consumer companies at 24%. There are hundreds of billions of dollars that could be issued to really still within diversification limits of that index. So I think investors are ready to go. We're certainly close to a record here in the U.S. for 2025. I think most estimates, and where both probably HSBC and B of A are on the street, are for more next year. Yeah. But when you look at the global bond markets too, and add that up for what we saw issuance globally this year, we actually issued more as a whole between euros and Aussie dollars and sterling than we actually did in 2020. So I think everyone's going to be raring to go when January 5th comes around.
But of course, tech is what's on everyone's mind. Yes. And this week, Blue Owl decided not to take part in Oracle's financing for a data center in Michigan. And that sent the cost of Oracle's credit default swaps soaring yet again. So there does appear to be some discrimination among investors even for that tech debt. Patrice, what does this show about the limits of demand for AI debt?
Well, I think what we see sometimes in CDS is folks are using CDS in different ways. They're using it as hedges to other parts of their portfolio in the market. So I don't know if it's necessarily an apples to apples comparison. When we think about AI, we think some of that valuation and concerns are overdone. If you look at the adoption rates, they're highest in the US, but still overall low. They're very low in the rest of the world. It is proven that a lot of productivity gains, cost savings, I think all of that is going to still be certainly on the come for the markets. And we think that a lot of the spending is being done by very deep-pocketed incumbents that have low leverage. I mean, if you look at within current ratings bands for a lot of these large issuers, they are highly generative cash flow and still have tremendous amounts that they could issue if they needed to, right? Bonds one source, before you could see really any erosion in ratings or portfolios.
Yeah, but in terms of the supply that's coming on, a lot of it is going to be tied to tech. And just for 2026, if you look at the numbers, they're pretty large, Rashawn. There could be more than $1 trillion of net new supply, which is something we haven't really seen before. That's a lot to absorb. At what point does supply overwhelm demand?
Yeah, I mean, listen, I think if you think about the AI story specifically, we saw just north of 120 billion of supply kind of come through the market on the IG. I think to your point around CDS, it's been an interesting phenomenon in that there's been a resurgence and a comeback of the CDS market, particularly when you think about the IG market. We call it sort of AI CDS. We've seen values in that market pick up materially just in the last 8 weeks, about 8 billion or so.
Yeah.
And when you think about from September, when we saw the big issuance of an issuer that issued in September, it's been about 15 billion or so. So I think that it's interesting. It's a little bit that investors are certainly using it from a balance sheet management perspective, but they're also using it to get long and more exposure to the space in terms of their notionals. And we've seen crossover investors, including equity investors, come into the space and use it to further fortify how they're investing in AI. And our businesses at Bank of America across FICC and equities, we've been partnering to help our clients with that. And we have a really dominant franchise on the CDS credit side that we've built, and we've been pushing volumes through.
So there's more participation on that side. Of course, it's not just AI. There's also M&A financing as well. The fourth quarter was the busiest on record for M&A-related bond sales, with companies, as I mentioned, raising money long before their deals are even being completed. The deals are definitely being absorbed right now, and pretty well, but I'm curious, what kind of risks does that create? Patrice?
Yeah, so when we look at M&A volume, we were about 200 billion this year in terms of total volume for M&A, and I think most market participants are thinking that could be up over 250 for next year. These deals are generally very well absorbed. Companies and investors love to be buying companies that are doing M&A because they're typically larger, more liquid. You get a chance to participate in a more meaningful way. So, you know, when we look at the pipeline, it's something that actually is pretty well known. We do see investors able to navigate around M&A announcements to know that something is going to be on the horizon that they can invest in. So we don't see a lot of risk with what we see in the calendar so far.
Very quickly, Rashawn?
Yeah, I mean, I think, listen, corporate balance sheets have looked pretty pristine. We've had blips here and there, but for your larger diversified companies, the leverage has been low. And so I think that makes investors comfortable as they sort of look at, you know, playing in the space and actually investing in the space, particularly with issuers with big balance sheets, diversified balance sheets, and sort of low leverage. And so I think the market is primed to be able to accept it.
Thank you both ladies for joining us today.
Thank you.
Patrice Altanji at HSBC Americas and Rashawn Reed over at B of A. And if you can't get enough talk on credit, check out the Bloomberg Credit Edge weekly podcast on the terminal and wherever you get your podcasts. Still ahead on Real Yield, the final spread the week ahead. We have a shortened trading week heading into the holidays. We'll break it all down for you. This is Real Yield on Bloomberg.
Thanks so much. Thanks. This has been great. Changing the strategy makes a lot of sense.
Doors.
For the invitation. Can't wait to see it.
Bring us together. A dedicated Fidelity advisor can help you open those doors with a comprehensive plan to help grow and protect your
The
wealth.
architect left the plans in the back if you want to take a look.
She's so ready to take over. For retirement and everything else you're looking to build. We'll get there. Your Fidelity advisor can help your legacy last for generations. Doors were meant to be opened.
fixes his hair. Doesn't know why he picked such an ugly shirt, but knows he can do more with his money. Ryan opens his Fidelity app, sees his opportunity, and takes it.
Ryan sets his investments to automatic.
That was easier than I thought.
It's a good shirt. Really? It's like flowers, but also a cow.
Not sure that helps.
Start investing with no account minimums. Talk about easier investing.
And even imagine that they can do with that interactivity.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I'm Scarlet Fu. This is Bloomberg Real Yield. It's time now for the final spread. The week ahead. On Monday, the Fed's Stephen Myron is going to be interviewed right here on Bloomberg Television. On Tuesday, we get the second read of U.S. GDP for the third quarter, plus durable goods and consumer confidence. On Christmas Eve, the BOJ holds its interest rate. The meetings minutes will be released of the BOJ's last meeting, and U.S. jobless claims are scheduled. On Christmas Day, most global markets are closed, and Friday is Boxing Day in the U.K., while U.S. markets do reopen. And for the final thought, happy holidays from Bloomberg Real Yield here. We will be right back on January 9th at 12 p.m. Eastern, same time, same place. From New York, that does it for us. Happy holidays. This is Bloomberg.
What happened?
Some bad people tried to hack me with sad affirmations.
Sad, Craig?
No. We're protected.
AT&T Dynamic Defense help protect us because small businesses need us.
So he's not sad. Guess we don't need these.
I think we do.
This AI Expo is a great manual for you to meet important partners.
Macau is located in a hub of technology, so it's the perfect bridge for the Asia continent.
Macau can gather lots of talented people from in the Great Bay Area.
Macau is investing in tech companies.
And the regulation is very open. I'm very optimistic about the future of Macau in pushing forward of AI.
This is a controller. Plug in and you're the hero, leaping higher and running faster toward new frontiers. But games are more than just entertainment. Now they're inspiring new ways of teaching, from elementary schools and colleges to professional training in workplaces, from factories to transportation hubs. And delivering these experiences depends on secure and reliable connectivity from AT&T Business. Because a controller isn't just a way to play, it's how we press start on something extraordinary.
There's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content, and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction, might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Stocks ending a choppy week with gains. The S&P 500 right around session highs right now, up by 0.9%. And as a result, it has erased its loss for the week. It's now higher by 0.1%, along with the Nasdaq wiping out its 5-day decline. Of course, we do have options expiration, some $7 trillion in notional open interest expiring today. You can see moves higher across the yield curve, especially at the 2-year, currently at 3.48%. Interesting moves in dollar yen. Big moves there. The yen weakening even after the BOJ hiked interest rates and signaled there's more tightening to come. But traders were disappointed that the messaging was not more hawkish. And we're looking at crypto as well, with Bitcoin up more than 2%. Again, there's that correlation with equities. A lot of people pointing to equities as being kind of the benchmark for sentiment, at least, on Bitcoin for the last couple of weeks. All right, let's highlight a couple of individual equity movers, and we go now to our markets correspondent, Nora Melinda, for more. Hi, Nora.
Hey, Scarlett. Let's take a look at shares of Carnival. We are seeing them in the green. This, of course, after the company reported fourth quarter earnings per share that beat expectations. They also delivered a forecast for the full year that topped estimates here. You are seeing shares of the company up more than 8%. They've reinstated their dividend, and all of this is buoying the sector higher more broadly. You also see shares of its peers, Norwegian and Royal Caribbean, pushing higher. But let's move from a green story to one that is in the red. We're looking at shares of Nike. Not a great day for the company. Shares down for double-digit losses, down about 10%. This, of course, is after the company reported and warning of a potential sales decline. We did see sales in terms of weakness in China and its key Converse brand. We did see some weakness in the most recent quarter. So it's really begging the question for a lot of investors as to whether or not the CEO is really able to pull off a turnaround story, given the fact that the stock is down more than 20% so far year to date. And let's wrap things up with shares of Oracle. We're looking at shares that are in the green, up more than 7% right now as we speak. This is after TikTok said that it was being bought by a group of buyers led by Oracle. So you are seeing shares of the company getting a lift, up more than 7%. This, of course, we do know that TikTok and ByteDance did say that they are going to be creating a joint venture here, Scarlett.
All right, good stuff. Thank you so much. Bloomberg's markets correspondent, Nora Melinda. And we're going to stay with that TikTok deal because Kevin Mayer, co-CEO of Candle Media and former TikTok CEO, joined Bloomberg earlier today to talk about his outlook for this agreement. Let's take a listen.
I think this is very good news for consumers here, and I think they'll be well served. So I think it's correct that consumers should have now put this in the back of their mind a little bit. This seems like a permanent solution. The only element of doubt here and risk is that China hasn't come out and explicitly, the Chinese government hasn't blessed the deal yet. I'd be a little concerned about that.
Let's bring in Bloomberg Tech's co-host, Caroline Hyde, for more on the story. I like what he said. It seems like a permanent solution, but China hasn't given it its final okay yet. Is this pretty much a done deal, though?
It feels that way because ByteDance is saying that it's done via Shou Chew, who is the CEO of TikTok, and therefore it feels as though China has given it the thumbs up. You've got to remember with Kevin Mayer, he was the guy who handed in his notice, who resigned back in August of 2020 in the first administration when they first started talking about taking away TikTok from ByteDance. He just couldn't see how his path to being a global CEO of TikTok would work. 5 years later, this still isn't a done deal. But he does seem to think that Oracle is the right partner here. They will take a 15% stake. You've also got Silver Lake, so private equity involved. You've got MGX, a Middle Eastern fund of money being involved as well. They're all going to be taking 15% stakes here. But there's also going to be ownership by the current US VC companies who have been piling money into ByteDance, which owns TikTok, and now will be ceding over a license to the algorithm and allowing Oracle and partners to be able to develop and train their own US algorithm. Again, Kevin Mayer thought that was really good for consumers as well as for the business. Look, he's a guy who's in content now. His Candle Media owns things like Coco Melon or like the Sunshine, Hello Sunshine. He wants his content to get to the biggest amount of users. He really thinks that US TikTok will remain a global brand, though, and somehow you will have this interoperability going on, even if we have a distinct algorithm for US users.
I'm glad you bring up the algorithm because that's key to this whole deal. That was the reason why it was held up for so long. Does the U.S. entity get access to that algorithm? I mean, do they get to see the secret sauce here?
So they're licensing it, and then they're going to train their own. There's still a lot of question marks about...
So is it the same algorithm then?
Well, maybe it'll be more bespoke to a U.S. consumer, and maybe we'll suddenly have a little less concern that we're all just seeing fluff and TikTok dances rather than STEM education and whatever is happening in China. I don't know about you, but I actually see more STEM. I've got a whole STEM area in my TikTok. But there are still question marks here. How much does ByteDance still have skin in the game? They have less than 19% ownership, and they get maybe 50% of profits. That's what Bloomberg's been reporting. But what is the national security question mark here? Now, Kevin Mayer is thinking that even under Project Texas, the original deal with Oracle, he was satisfied that national security should have been put to the back burner. Here again, he thinks that this should satisfy the letter of the law, which was passed under the Biden administration. Many had worried that maybe this won't cut the muster if indeed ByteDance still has some sort of ownership over the overall 19% seat. And they're not going to be getting a board seat maybe, but what's going to be happening underneath? Is this going to satisfy Congress as well as the White House?
Well, at the very least, we've begun the process, and we're going to start answering
a never-ending process.
5 years ago, right? All right, Caroline Hyde, thank you so much. Bloomberg Tech co-host Caroline Hyde on the latest when it comes to TikTok. Speaking of tech, a lot of money is going to be shuffled around in markets today as the NASDAQ 100 is being rebalanced. James Seifert with Bloomberg Intelligence has been researching which stocks might see the most selling as a result. There are also some interesting additions to the index being made, and James joins us now. So James, give us the lowdown. What's going to be added? What's going to be taken out?
Yeah, I mean, so some of the big names being added are Annulum Pharmaceuticals, Seagate, Western Digital. There's 6 going in. Insmed, I won't name all of them, but some of the names coming out. Lululemon is actually coming out. Global Foundries, CDW. Lulu is the main name that I knew before this. On Semiconductors coming out. But ironically enough, those names going in and going out aren't actually the names that are going to see the biggest buying and selling. It's some of these other larger names that are actually going to see some huge moves because of the way that the index actually rebalances, like Meta and Broadcom.
So explain that, because that would be the immediate knee-jerk reaction, right? Buy the things that are going in, sell the things that are coming out. But that's not necessarily the way to do this.
Yeah, so the index is set up. So part of the problem with the NASDAQ, as everyone who's watching this is aware, it's very top heavy. And every annual reconstitution, when they take names out, put names in, they actually cap how big the top 5 names can be. So that's capped at 38.5%. And then any names outside of that top 5 are capped at 4.4%. And so Broadcom, basically, since the last reconstitution through the new date, is up 115%. But it's still not in that top 5. It's not big enough to crack that number. Ironically enough, it's actually, if you look at the index now, Broadcom, despite being $500 trillion smaller than Amazon, is actually a higher weight just because of the way this is weirdly rebalanced. So what's going to happen is Broadcom is actually going to see a lot of selling, Meta going to see a lot of buying, just because of the way that these caps are set up so that the index stays relatively diversified.
Gotcha. And of course, we pay so much attention to the NASDAQ 100, which, as you said, is top heavy because of the ETF, the Qs, right? QQQs are indexed to the NASDAQ 100, and they track them devotedly. And there's a lot of money chasing the Qs.
Yeah, I mean, nearly $400 billion is tracking the Qs. But we just had some huge news this week, basically, about them changing their underlying structure, which is going to be good for Invesco themselves, the ones who operate the trust, and for end investors. They're going to be lowering the fee. They're going to be changing the structure to make it more efficient. So all this is good. But that's the largest fund. There's also QQQM, which is actually a little bit cheaper and already in this newer structure, open-end fund. But there's like $722-ish billion around the world that we could find in ETFs and mutual funds. And that doesn't even include, SMAs, CITs, these other private fund strategies. So that's why these dollar amounts can get so big when you're getting, near $1 trillion in assets that are tracking this index.
Absolutely. The Qs have an expense ratio of 20 basis points, and the QQQM, as you pointed out, lower at 15 basis points. James, really appreciate your joining us today. James Seifert with Bloomberg Intelligence on the NASDAQ 100. As the year comes to a close, we're also learning what asset classes have underperformed. Wagers on natural gas fizzled this year, putting Citadel on track for its worst annual return since 2018. For more on this, let's bring in Nishant Kumar. He is chief correspondent covering hedge funds for Bloomberg News. So what can you tell us about what Citadel has been doing when it comes to natural gas and why things haven't worked out as well?
Yeah, sure. So commodities have been the big differentiator for Citadel over the years. While most of its multi-strategy hedge fund peers rely on traditional equities, rates, systematic trading for returns, Citadel really built a much deeper commodities platform, including in natural gas. And it has paid off for Citadel. For example, in 2022, they generated $8 billion from commodities trading. That was half of their total returns. Same story the next 2 years. They generated $4 billion each in 2023 and 2024. Again, half of their profits. So that edge really helps Citadel pull away from rivals. But, it cuts both ways. When commodities cool, as they did in case of Citadel this year, the drag on performance is far more visible. But let me add here, Citadel is still heading for its 17th straight year of gains. 9.3% looks modest by its own standards, but it's in line with what multi-strategy hedge fund peers have produced. It just looks modest because Citadel has been producing just under 20% return on an annualized basis over the last more than 3 decades.
Yeah, that context is critical, right? The fact that the hedge fund is on track for an annual gain below 10% for just the 6th time. But by any other measure, that's not bad. Talk a little bit about how Citadel is perhaps not alone in this situation in kind of being exposed on the nat gas bet.
Yes, so Citadel has really led the way, and its success attracted all the other multi-strat hedge funds to build into commodities. It kind of forced rivals to copy its model, go on a hiring sprint, and expand into commodities and physical markets. But others are not that exposed. Returns are little from the commodities business for other multi-strat hedge funds, so it hasn't affected others too much. For example, Millennium is almost as much, has made as much money as Citadel this year, but then their annualized returns are only around 13%, so not too far away from that. If you look at Balyasny, Schoenfeld, Exodus Point, they are focused more on rates, equities, and other asset classes, and they have done significantly better.
Yeah, Point 72 now looking to build a commodities business as well. So there's plenty of activity here for those commodities traders if they want to stick in the hedge fund world. Bloomberg Chief Correspondent Nishant Kumar joining us from London. Thank you so much, and happy holidays to you. Coming up as we enter the thick of the earnings, I should say the holiday season, our next guest will share her view on retail in 2026 and the names that she is most bullish on. Dana Telsey is CEO and Chief Research Officer at Telsey Advisory Group, and she joins us next. This is Bloomberg.
Tiger Woods built his career on forward thinking, staying ahead of the curve and away from the expected. Insperity believes that in business, it's no different. They're dedicated to driving your business forward, providing the HR support you need to innovate and win. You don't become one of the greats by doing things the same as everyone else. You take a swing, knowing you've got the right partner by your side. Insperity, because how you HR matters.
After 11 increases, the Fed has paused rate hikes.
In the fourth quarter of 2023, we wanted to anticipate the changes that would be coming from a rates environment. Our traders, portfolio managers, and credit analysts can collaborate on the fly as the tides change in the market. A deep bench of expertise is having people with conviction to make those calls. So where we find value, we will go and execute.
Is crushing it. I mean, I have both.
Absolutely.
But one thing YouTube has is I don't have to pay for YouTube. Are these real threats to Netflix?
Netflix is the luxury equivalent. Consumer product is consumer tech.
Don't miss Open Interest live weekdays.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we take a look back on the first 25 years of the 21st century. Jason Furman on the economics of the great financial crisis and COVID pandemic. Afsani Beschloss and Elizabeth Economy on the transformation of China. Ray Dalio on history made in the markets. And Sam Palmisano and Craig Moffat on the new century of tech.
It looks to us like you're going to have yet another bubble bursting.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our stock of the hour, and we're focused on Lululemon. The shares are lower today, and this comes after the stock surged yesterday on news that activist investor Elliott Investment Management has built a more than $1 billion stake in the athleisure company. And that's just one part of the sector that we'd like to take a closer look at as we head into 2026. In her latest note, our next guest says there could be a lot of drivers for retail spending in 2026. I'm pleased to welcome Dana Telsey, CEO and Chief Research Officer at Telsey Advisory Group. She has a market perform rating on Lululemon with a $215 price target. And do you see this Elliott Management stake in Lululemon as good for the stock longer term? Will it fix the problems that investors have identified?
Basically, it's people that will fix the problems that they've identified. And we've heard and known of the problems for basically the past year or so. The newness in the product assortment is essential in order to drive more conversion. You also have another thing out there. The consumer overall is buying new and different things than just activewear. So enhancing the assortment is key. I think overall, with changes to come, and certainly you can't keep doing the same thing over and over again. So they need to take the brand and update it and modernize it to what today is, because we're 5 years from the pandemic now, and there's definitely new interests that consumers have.
Absolutely. We know Elliott's been working for months with Jane Nielsen. She is a former CFO and Chief Operating Officer over at Ralph Lauren. You know her well. What does she bring to the table if she plays a larger role in Lululemon?
Jane Nielsen is a very competent and capable executive. What she brings to the role is operational expertise, being able to identify and provide solutions, whether it's to supply chain and sourcing, technology, what's happening with the awareness of the product, whether it is insights into retail real estate, whether it's insights into sourcing. She knows how to drive average unit retail selling price increases and managing inventory levels in order to get the benefit of top line while enhancing and increasing the bottom line. She's very capable and she's well sought after.
Right, and she's viewed by Elliott as a potential CEO replacement for Calvin McDonald, who is now going to be stepping down at the end of January. Does she need to undo some of the initiatives that McDonald had put in place, whether it's teaming up with the NFL or Disney to put some of their logos on Lululemon wear?
I think overall collaborations have proven successful for retailers of today. The ability to go viral, capture an expanding audience. We've seen even Abercrombie, for example, partner with that NFL. I think it's getting back to the core and being able to recapture the key consumers and have them buy, wait, I need another pair of black leggings that do this or that. Or what's the new fabric? What's new that I don't have in my wardrobe already? I think is one of the things that Jane can help think about, curate, and put a team in place to drive for success.
All right, let's broaden out our conversation to just how retailers are positioned for this holiday shopping season. We know the consumer is very, very concerned and anxious, but they are spending. They just are spending with greater discretion than ever before. And so that benefits certain names like TJX, which owns Marshalls and TJ Maxx. Where does that leave the full price retailers?
I think overall, one of the things you're seeing, and we're seeing it during the holiday season, feels like we'll see it through 2026. The assortment and activation drive appreciation. Whether the benefits of 26 with events, whether it's the World Cup, the upcoming Winter Olympics, America 250, along with higher tax refunds, potentially lower rates, give consumers spending power. But yes, that lower to middle income consumer, their wage growth doesn't match what higher income consumers' wage growth is. Therefore, what are we seeing? Trade down to discounters and off-pricers, whether it's the Walmarts, the TJs, the Burlingtons, or the Rosses. But you're also seeing newness take interest. And that newness, look what Gap's done. Gap partnering with Korean bands or whatever and getting interest. The music and sporting events drive interest, and they're getting activation in clothing. Take a look at Victoria's Secret. The fashion show this year was updated and enhanced and modernized. Hillary Super is put in place, whether it's new profiles of core essentials at Victoria's Secret, upgrading and updating the pink apparel. And what you've seen at Urban Outfitters, one of the only retailers with new concepts, like Nuuly, like what you have with Free People Movement. And you're seeing average unit retail selling price increases from established brands like Ralph Lauren, who now captures a broader audience, or Tapestry with Coach, and how they're adding new styles into core collections. So what are retailers doing to, I call it the letter A, affordability, assortment, AI, adaptability, and advertising? That's what I'm looking for in 2026.
That's a long list of things that the CEO has to oversee.
Yes.
And newness is at the top of the list, as you put it. How do you get that newness unless you've been in the apparel sector and unless you've been in the retail sector? Can you bring that in from some other industry?
You can, but always merchants typically, you need the apparel background with it. So you need key executives who've had apparel insights or who know about manufacturing and sourcing. There's a reason why when you think of consumer, and can be all different categories, they all focus on the same thing. How do you drive their interest? Whether it's in toys, whether it's in consumer electronics, or whether it's apparel.
Got it. All right, Dana, really appreciate your taking the time to speak with us, especially as we get closer to your busy period, the last few days before Christmas. Dana Telsey is CEO and Chief Research Officer at Telsey Advisory Group. This is Bloomberg.
What happened? Some bad people tried to hack me with sad affirmations.
Sad, Craig?
No. We're protected. AT&T Dynamic Defense help protect us because small businesses need us.
So he's not sad. Guess we don't need these.
I think we do.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
The goal is to expand in terms of countries, in terms of geographies, but also in terms of products, new services that we can launch in geographies that we have presence.
Premieres December 19th, only on Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
So as the market matures and you see increased in institutional participation, I think we could be at the very beginning of a prediction market super cycle with growth in volumes and listed contracts accelerating from here.
Robinhood CEO Vlad Tenev speaking earlier this week as that company unveiled its expansion into prediction markets. And the story of prediction market growth continues today with an announcement from DraftKings, which is releasing a new app that allows customers to trade contracts on sports and financial events. Ira Boudway has been covering this for Bloomberg, and he joins us now. So, Ira, contracts on sports through prediction markets is not sports gambling legally, even though it feels like it when you are actually doing it. That makes a rollout, a national rollout that DraftKings intends, kind of complex, doesn't it?
Yeah, they've had to be very careful about how they're doing this. So they operate sports books in a lot of states, and they are not going to offer sports contracts through prediction markets in any of the states where they operate as a sports book. So they're going into 38 states with some kind of prediction markets events contracts, but only 17 of those states are going to have sports betting allowed because they're trying not to upset the regulators in the states where they have sports betting licenses.
And both DraftKings and Flutter, which owns FanDuel, are kind of playing catch up to Kalshi and Polymarket when it comes to prediction markets. The word is that these are very popular ways for people to engage in financial markets or other betting forms of wagering. Maybe betting is not the right word, but do the numbers back that up? Is there that much activity on prediction markets?
We're seeing really rapid growth. So in the last couple of months, really since the start of this NFL season and since Robinhood got into this in a big way, you're starting to see trading volumes in the billions of dollars a month on Kalshi and on Polymarket. And that is enough, I think, to be significant. You know, DraftKings told me that they are not seeing prediction markets cut into their business in states where they're operating as a sports book. But one key thing that this move today allows them to do is to get into states where they are not operating as a sports book. And there are some very big markets: Texas, California, Georgia, Florida. I think that's probably the biggest key here for DraftKings, is that now they have access for sports products in those big states.
All right, good stuff. Ira, thank you so much. Ira Boudway of Bloomberg News talking to us about, of course, DraftKings now getting into prediction markets. I'm Scarlett Fu, and that does it for Bloomberg Markets. Have a great weekend, everyone. Balance of Power is up next from Washington. This is Bloomberg.
Tiger Woods built his career on focus and resilience. It's the same in business. Insperity helps you adjust and keep moving forward. Insperity, how UHR matters. Learn more at insperity.com/tiger.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at midnight Eastern Time, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we take a look back on the first 25 years of the 21st century. Jason Furman on the economics of the great financial crisis and COVID pandemic. Afsani Beschloss and Elizabeth Economy on the transformation of China. Ray Dalio on history made in the markets. And Sam Palmisano and Craig Moffat on the new century of tech.
It looks to us like you're going to have yet another bubble bursting.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Affordability gets another road test. Welcome to the Friday edition as the president prepares an announcement on drug prices today before flying to North Carolina for a speech on, yes, affordability. We'll get the latest from Bloomberg Washington correspondent Tyler Kendall. And as we wait for the Epstein files to drop, that's also supposed to happen today, at least some of them. We're going to talk it out with former federal prosecutor Sarah Krisoff coming straight up. And with our political panel, they're with us for the hour, all after a look at Wall Street. We start with the Friday trade and Charlie Pellet at World Headquarters in New York. What do we have, Charlie?
Right now, we got the best level of the day, very close to it, Joe Matthew, with the S&P advancing 61 points right now. In fact, we are on track as of now for a winning week. On the week, the S&P is up 0.1%. Right now, the S&P is gaining 0.9%, up 61 at 68.35. Dow Industrials up 283, up by about 0.6%. And NASDAQ on this Friday up 1.2%. The NASDAQ 100 index up 1.3%. And the Russell 2000 taking part in the advance up by 0.9%. The Bloomberg Mag 7 index also higher, up 0.6 with a 10-year that's currently yielding 4.14%. The 2-year 3.48%. Gold is up $21 the ounce, 43.54. That is a gain of 0.5%. Silver now surging 3%, 67.43 the ounce. West Texas Intermediate crude oil up 1%, 56.70 on WTI, and Bitcoin 86,844 Bitcoin right now up by 1.5%. Earnings news: Nike lower after the company warned that sales will decline this quarter amid persistent weakness in China. And at its Converse brand, we've got Nike shares trading lower today. Right now, we've got Nike down by just about 9%. Also out with earnings here, UPS, FedEx. FedEx shares also lower today after earnings. FedEx right now trading higher by 0.1%. UPS lower. It is down by 0.9%. So again, recapping the Dow, the S&P, NASDAQ, all advancing. S&P up by 0.9%. Balance of Power, the Friday edition continues right now. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie, we thank you. Nice to see you on a Friday, and thanks for joining us on Balance of Power here on Bloomberg TV and radio. We expect to hear from the president at some point this hour. He was scheduled to be underway at the top of this hour with an event specific to drug prices. And you're going to hear us connect the dots here on the issue of affordability. That's at least what the White House wants us to be doing, with the president leaving the bubble later today to rally the troops on the issue of affordability in a rally in North Carolina. It's not going to be until much later, 9 p.m. Eastern time. We've got a full day of activities at the White House as we also wait for the Epstein files to drop. This is deadline day, and the Department of Justice has until midnight. Back to the issue of affordability. That's the conversation that's being provoked by the White House. And we spoke earlier today on Bloomberg TV and radio with the U.S. Trade Representative Jamison Greer about what's the cause of the stubborn price inflation that we've seen specifically at the grocery store when it comes to foodstuffs. And we talked about this yesterday when the CPI report came out, whether it's meat or eggs, up dramatically over this time last year. Here's what Greer told us this morning.
Any good president wants to address affordability, and our president is. And over the past month, we saw, dairy, fruit and vegetables, all kinds of prices go down for basic staples. So that's a great development. When we saw inflation earlier, it's really about housing, health care, driven by Obamacare disaster. So I don't think that, food imports are really going to be an issue for us. The tariff program is really about creating jobs, and the president's regulatory approach is really about bringing prices down and bringing affordability.
In a short time, the president will be, as I mentioned, making an announcement from the White House, and that's where we start with Bloomberg's Tyler Kendall, because these really are all the same story. Tyler, when the president talks about affordability, he frequently points to drug prices with deals with the likes of Pfizer and Lilly, this most favored nation status that they're receiving, as well as gas prices. The rest of the prices we're paying remain pretty stubborn. What's he going to say about this today?
Right, exactly. It's no surprise that this event is happening to cap off a week where we really saw the White House try to refocus on the economy, retool that narrative amid what has been consistent polling showing that President Trump is losing ground when it comes to Americans' confidence in him, in his handling of the economy. We were talking about this last hour on this program, but you spoke earlier this week with Cliff Young of Ipsos. And he had a new poll out this week being cited widely that shows that Americans' approval of President Trump has now slipped to 39%. But really importantly, it's showing that his support among Republicans is eroding. And that's why you're seeing the White House really go out this week with a slew of initiatives, his primetime speech, and now this event on drug pricing. According to the White House press secretary, that's what this is going to focus on, lowering the cost of pharmaceuticals. There was some reporting out earlier today from Reuters that named those companies that could be here for a potential deal at the White House, including AbbVie, Bristol Myers, Gilead, and Merck. As you mentioned, President Trump had signed that executive order in May, urging the administration to negotiate on most favored nation drug pricing, essentially alleging that there are unfair trade practices here, that these companies are giving better rates to other countries. And the understanding has consistently been that if they can bring down the pricing, then these companies are ultimately going to get a tariff reprieve from the administration.
Interesting. So he'll have something potentially new to talk about in North Carolina tonight. What's the plan? He's going to Rocky Mount. He's stumping as well as campaigning.
Well, and you know what's important about this area in North Carolina. This is North Carolina's first congressional district. It was newly redrawn. These are new maps in North Carolina, and this district had historically gone to Democrats, but now it looks like it will lean Republican. So it feels like we are so long away from next November, but everything really does have to do with the midterms. This is all about campaigning and reaching out to the voters in this area in a critical battleground state, now in a critical battleground district, potentially. But
he's going for Whatley, right? Michael Whatley's running for Senate, and that's why they chose North Carolina, beyond its importance on the map in general.
Right, exactly. This is going to be about down ballot races, because even though President Trump himself isn't on the ballot, this has a lot to do with his agenda going forward and whether or not he can get through initiatives like we saw him get through this year if Republicans don't maintain both chambers of Congress. But you're exactly right. This is the second stop in what's expected to be a domestic tour around the country on the issue of affordability. And that's really where the White House has tried to refocus the conversation. We were talking about it earlier, but in just the last 24 hours, Bloomberg News has a great story out on the terminal looking into just the list of policy initiatives released in the last 48 hours, right? Those checks that are going to service members, some gains for the cannabis industry, making the days around the Christmas holiday federal holidays. There has been this retooling to talk about domestic policy amid what has been recent weeks really focused on foreign policy, right? We started this show for weeks talking about the U.S.-Venezuela tensions ratcheting up, what's happening with the talks in Ukraine. And it does appear that the administration wants to shift that narrative.
Really something. It's a late speech, 9 p.m. Eastern time. And it's kind of interesting the way this is all going to pan out. And we're going to talk about this in just a moment here with Sarah Kristoff. But it's Epstein Day. The files are supposed to drop. We don't know when, right? But the DOJ has until midnight. So presumably the president could be on stage in North Carolina when this happens.
Right, and there seems to be an understanding that they may come later in the day to go up against
Friday news drop
against the deadline. And we did hear from the Deputy Attorney General Todd Blanche earlier, who said that there are so many files that ultimately have to come out. We probably aren't going to get them all today. And you know, you've been talking about this. There's no enforcement mechanism to make sure that they do all come out, though it did seem that the administration was indicating that they're going to. And of course, this comes after Congress overwhelmingly passed that bill last month, compelling the DOJ to release all of these items. We should say it requires the release of unclassified investigative records, flight logs, travel documents, immunity deals, internal department communications, and papers. The list is really long here, but of course it poses a political headwind for President Trump that he hasn't really been able to get ahead of, and that's been dominating the conversation over the summer, for example. So we'll see how that sort of pairs with him trying to talk about the issue at hand, which is the economy.
Well, it's pretty amazing to hear from Todd Blanche, Deputy Attorney General, telling Fox News that they will miss the deadline. We'll get hundreds of thousands today, but there will still be hundreds of thousands to be released. So they're not going to get this all done as mandated by law.
No, and one of the other questions here is, of course, how the DOJ is going to invoke some of those exceptions. We know that there's exceptions to protect survivors. There's also exceptions here that officials can withhold any information if it's related to an ongoing investigation, which could be complicated by the fact that President Trump did direct the DOJ to launch investigations into alleged ties between Epstein and prominent Democrats. So maybe that could also impact the amount of files that we ultimately end up getting. At this point, we just don't know. It's wait and see. But as you said, the Deputy Attorney General is saying that we will get, quote, several 100,000 documents today. It's going to take us a while to go through them.
No doubt. This is going to take the weekend. I suspect that headlines will be emerging throughout the weekend. Tyler, thank you so much. Bloomberg's Tyler Kendall helping to update us here in Washington. That sets the baseline for the hour. When the president speaks, we'll bring you to the White House for that news on drug pricing. And we're watching shares of all those pharmaceutical companies get a bit of a bid on this headline this morning. But we want to stick with the idea of the Epstein files being released, at least some of them today. Sarah Krisoff is partner at Cozen O'Connor and former federal prosecutor with the Southern District of New York and joins us now live on Bloomberg TV and radio. Sarah, it's great to have you back. I'm looking at the actual language in the law that President Trump signed into law. Quote, all unclassified records, documents, communications, and investigative materials related to Epstein in a searchable and downloadable format must be prepared by the end of the day. So is the administration about to break the law?
They're clearly not going to fully comply here. And I encourage everyone to actually just read this law. I mean, it only takes a few minutes. It's short. It's a couple pages. But it really helps you understand what Congress has mandated here and will help people evaluate whether or not the DOJ is compliant with what they are required to do.
So was this just a matter of not getting homework done on time, or would that have been impossible knowing that it is truly hundreds of thousands of documents we're talking about?
I mean, there's a couple things going on here, right? I mean, first of all, lawyers are not particularly known for their timeliness. So it is not infrequent that lawyers are later or running behind on a deadline. So that is sort of one thing to consider here. The other thing is that the DOJ knows there's no real enforcement mechanism here. What is going to happen to them if they are not compliant with this or sort of timely with their obligations under this law? Not that much, probably. And so they, did they make a good faith effort to get documents together in order to release them today? Maybe. It sounds like it. But, it is a process. It's certainly, to the DOJ's credit, it does take a lot of work to comb through these documents page by page to assess redactions. But they have an enormous workforce to get that done. So if they had wanted to get it done, they certainly could have.
Okay. With that said, there's a big question about enforcement or lack thereof. Ro Khanna was talking about this, the Democrat from California, one of the co-sponsors of the discharge petition, said that while the department would be breaking the law, as we've just established here, if it didn't meet the deadline, officials would be unlikely to be prosecuted during the current administration. They would likely be subject to prosecution in the future. So could Todd Blanche find himself in trouble in 3 years?
Yeah, it's certainly possible. I mean, there are some avenues for enforcement here apart from sort of criminal prosecution. The Congress could bring a civil case. Individuals could bring a civil case. There could be sort of formal complaints lodged against DOJ, although those are likely not going anywhere. But there are sort of some processes that could be followed short of a criminal case. But there is this idea floating out there, an interesting idea that there could be some sort of criminal prosecution down the line, but that would require, clearly the DOJ is not going to bring charges against itself or its own representative. So that's going to be something that would happen down the line with a different administration and the DOJ run by different folks.
Well, when you consider this lack of enforcement, the political interests of the administration here and the idea that they can essentially redact anything they want. We might not see anything new today or ever, right?
Yeah, I mean, there are, I guess, there are other processes that Congress has to bring action against individuals that they think have violated the law, right? They have impeachment processes that they utilize. So, I mean, there are other avenues they use. But, I mean, I think, we have been waiting very patiently to see what is in these documents. Once we get them, it's going to take a long time to search them and parse them out. Although, with in the current technological landscape, the processing of this type of information is much easier than it ever has been before. And there's a lot to come in the next few weeks to see whether DOJ complies at least in part with the law.
When, assuming this does happen, when the files are released, then considering, Sarah, your experience in the legal field, what will you be looking for? Because you're going to have massive bands of journalists and lawyers digging through these files all weekend. Where do you start?
Yeah, I think some of the most interesting information is going to come in the FBI 302s, which are essentially reports that the agents prepare. So, for instance, if they're interviewing a witness or a person of interest, they are required under their regulations to prepare a report, a 302, regarding that interview. And so the 302s are probably the best starting place for anyone looking at this information to really get a sense of the scope of the investigation that has happened in years past.
Understood. With all of that said, it's entirely possible, if not likely, we're going to be seeing names that have not been invoked in this story yet. To what extent can individuals find out if they are in these files, if they may be prosecuted because they're in these files? How messy is this going to get?
Yeah, so it's a really interesting question because the law itself tells DOJ you cannot withhold information just because it is going to cause someone reputational or professional or personal harm, right? So imagine someone who has a close social relationship with Epstein, but no involvement in the sex trafficking part of Epstein's life. And so that person may be sort of impugned by the documents that are released, but really there is no basis to levy any criminal charges against that person. And that person was in fact ignorant of the Epstein's involvement in the criminal activity. So those types of issues are really ones that we should consider and are important ones to think about, as particularly when we have a situation like this where we're releasing investigative files. And I think that sort of precise situation is the reason it is so unusual and to release investigative files.
We've only got a minute left, Sarah. This has been a fascinating conversation. Remember when Pam Bondi, the Attorney General, said she had the client list and it was on her desk? Of course, we now assume that was not the case. Is there a client list, or are we just digging through a lot of receipts here for the next many days?
Yeah, I don't think we're going to see anything like that. I mean, and I think if some sort of very delineated list was there, we would have known about it before this point, right? We had the years-long Epstein conversation and the Maxwell investigation. We would have seen it before. Right. We haven't seen it yet.
Well, I'm really glad you could come back to talk to us about it. Sarah Krisoff, we thank you for your experience and your insights in this conversation. When the files drop, you'll be hearing about it and reading about it right here at Bloomberg. We'll assemble our political panel next for their take on the politics around Epstein, next on Bloomberg.
Doors bring us together. A dedicated Fidelity advisor can help you open those doors.
Oh, can you sign this for me quickly?
She's so ready to take over. With a comprehensive plan to help grow and protect your wealth for generations. Doors were meant to be opened.
What happened? Some bad people tried to hack me with sad affirmations.
Sad, Craig? No. We're protected.
AT&T Dynamic Defense help protect us because small businesses need us.
So you're not sad. Guess we don't need these.
I think we do.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
The goal is to expand in terms of countries, in terms of geographies, but also in terms of products, new services that we can launch in geographies that we have presence.
Premieres December 19th, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Yes.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
It's Netflix versus YouTube.
100%. I do think in the world of more AI stock, people are going to look for destinations where they really want higher quality, curated, high production storytelling.
But YouTube is crushing it. I mean, I have both.
Absolutely.
Right?
I have both.
But one thing YouTube has is like, I don't have to pay for YouTube. Are these real threats to Netflix?
Netflix is the luxury equivalent. Consumer product is consumer tech.
Don't miss Open Interest live weekdays.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing right now. S&P 500 index very close to session highs on the S&P. Looking at an advance of 63 points right now at 68.38. That is a gain of 0.9%. Stocks are climbing on a record 7.1 trillion options day. The Dow up 324, up by about 0.7%. NASDAQ Composite Index up 275 now. That is a gain of 1.2%. The Russell 2000 index of small cap shares higher by 1.1%, and the Bloomberg Mag 7 index up now by 0.6%. 10-year 4.14%, with the 2-year 3.48%. Gold up $21 the ounce to $43.53. Spot gold up 0.5%. Silver up 2.9%. Silver now trading at $67.36. West Texas Intermediate crude oil 56.80 a barrel. WTI up by 1.2%. And Bitcoin now higher by 2%. Bitcoin at 87,292. Earnings news. Carnival Corp gave a better than expected profit outlook for next year and reinstated dividend payments, sending shares of the cruise line operator higher. Carnival Corp shares, they are advancing right now. We do have Carnival shares up by 8.5%. After earnings, KB Home shares down 8.4%. The home builder posted fiscal fourth quarter profit that missed analyst estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thanks. Not bad. Not a bad looking market here. VIX down to 15. Even Bitcoin is rising. We'll keep tabs on the markets for you here with another update from Mr. Pellet in about 20 minutes' time here on Bloomberg TV and radio. The entire city of Washington is holding its breath for the release of the Epstein files that we were just discussing in a great conversation. We learned a lot from Sarah Krisoff about the way this might work, knowing that the law not only mandates the release of these files today, but goes even further to call for all unclassified records, documents, communications, investigative materials to be made available and searchable and downloadable online. So when this happens, you're going to see scores of headlines come out probably today, but also over the course of the weekend. They're talking about hundreds of thousands of documents. The Deputy Attorney General, Todd Blanche, telling Fox News they're not going to get them all out today. That's how many, I guess, there are. They're not ready. We'll have hundreds of thousands more to be released in the days or weeks ahead, even though that would technically be violating the law that President Trump signed himself. We turn to our political panel for the political side of this story, having now covered the legal side. Bloomberg Politics contributor Jeannie Shanzano is with us, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. At her side, Lisa Camuso Miller, Republican strategist, Senior Vice President, Rock Solutions, former spokesperson for the RNC. So let's get into it, Jeannie. We talked about it for months and months. It ended up happening in a discharge petition. A vote was forced by a couple of lawmakers. It then gained critical mass, sailed through the Senate. The president had no choice but to sign it. But will we actually see the files today?
It's still unclear. There are so many loopholes in the bill, even though it was written fairly tightly. They include everything from any information on the victims to things about national security. And of course, as we've talked about, any ongoing investigation. So there's a lot of ways the DOJ could defend themselves by withholding information. Todd Blanche going on Fox News and saying, you know, we're going to do the best we can, but we don't know if we'll get all of them out, or it sounds like they're not going to. But I think left out of all of this, and this has been true from the beginning of this saga, are the victims, the 1,000 or more women who at that point were children in many cases, who were victimized by the most powerful men in the world. They have continued to be victimized by this process. And that is on both sides of the aisle. The Democrats' drip of information has re-victimized these victims, and some of them have talked about that. And it would be very nice if Washington would find a way to support these victims by letting them know what's coming out and when, so they are prepared for this onslaught. I think that is the most troubling aspect of this story.
Lisa, we've talked a lot today about the lack of enforcement here, and Todd Blanche is already making it pretty clear that they're going to violate the law by not getting everything out today. There's not much that can be done, but political pressure as opposed to legal pressure is a very different thing. The fact that we got to this point is due entirely to political pressure. If the White House, if the DOJ doesn't satisfy people, and you're hearing as much skepticism as I'm sure I am here, a lot of people don't think that they're going to be satisfied by the release today. What will be the political response?
You know, I don't know what the political response specifically will be, Joe, but I think the thing to watch most closely here, Jeannie makes a great point about all of those that have been impacted by this. And I think that the worst part of this is that they will relive this over and over again. Politically speaking, Joe, what really does an incredible amount of harm is to all of those vulnerable members of Congress who have no response to what is about to happen, because the White House has given almost no guidance to those members about what it is that's about to happen. So there is an intense and very strong unhappiness amongst elected officials out in those vulnerable districts, feeling very much without any preparation, any understanding of what is about to occur, and not having the right words to say when this information does become available. So it's going to be incredibly corrosive for hundreds of people that will be affected. But overall, there will be questions, there will be no answers, and it'll be a lot more confusion for an issue that really, really deserves to be settled and solved and resolved for so many.
Well, that sounds like a disappointment, Jeannie. Should people prepare to be disappointed?
I mean, the whole thing is incredibly sad, but I think there are heroes in this story. Number one, these victims who for decades have gone against the odds to report on the most horrendous things that can be done to a person and who kept after it. Of course, the congressmen and women who pushed against their own political, with their own political future at stake to get these released. And of course, also reporters like Julie K. Brown of the Miami Herald and so many others who have made sure that they were going to be on this case. And those reporters who are on a Friday night tonight waiting to see these releases so they can pour over them. I mean, so there are really good and positive aspects of this. And I would also include those people in MAGA and elsewhere who wouldn't let this rest. So, we see a lot of positive aspects of this, but I think the negative parts are so glaring, and they mostly have to do with elected officials and on both sides of the aisle who have not only committed these crimes, but turned a blind eye to others who did and have not been willing now to abide by law and get these out immediately and in the interests of these victims. So I think there's a positive, there's a negative, but I think the most important thing is that we remember the thousands of victims here who are reliving this as we wait for this to drop today.
Well, I appreciate you're returning to that point, Jeannie, and I'm as someone who worked in a former Republican speaker's office, Lisa, I'm curious your thoughts about the conversations that took place with Mike Johnson, knowing that there were so many members who wanted this, there were so many folks in the MAGA community who demanded it. It's partly why Donald Trump was looked at the way he was in the campaign, because they thought he would be the only one to actually do this. And the fact of the matter is Mike Johnson resisted this till the very end. It required a discharge petition to go around the speaker's office and bring it to the floor. Then suddenly everybody was on board and it cruised right through the Senate, as I mentioned earlier. Nothing seems to get done without a discharge petition now, Lisa. Will Mike Johnson regret that decision?
It's really hard to tell, Joe. This speaker himself has been incredibly cooperative and has worked really hard to work in close tandem with the White House for a variety of reasons. It's very difficult for him because of the slim margin that he represents in the House on the Republican side to really get anything done without that kind of very close connection and very close coordination with the White House. But to me, my understanding is that there's been very little guidance, very little information shared from the administration into the Republican conference or any elected officials. The other cynicism I have here, Joe, is that it feels to me like this is going to be a lot of waiting and a lot of anticipating for something that ultimately will not reveal enough information for some actual stories to hit. And so maybe I am the cynic of Washington, D.C. today, but I don't expect this to be as explosive and explosionary, or whatever the word is that you use for this Epstein. I think that this will be the kind of thing that will be a great big buildup to a great big nothing when it all comes to be in the light of day. And not because there aren't people that are guilty, but the way that is revealed and the way that it's rolled out, that it becomes less of a story because of the way that it has been handled, to your original point that who knows how much will really be offered up today.
Spoken like someone who's been around Washington for a minute. Jeannie, the president's going to be on stage tonight. He's going to be in North Carolina, 9 p.m. Eastern time. If this is some kind of Friday night news dump, it'd be the ultimate Friday night news dump, I guess. And the later this goes, I guess later people are going to be up sorting through these files. Does he have to mention this? I mean, would you consider the dynamic of him in front of thousands of people when these headlines break?
Yeah, I mean, you're hard-pressed to imagine what he would say about it beyond what he's already said. And what he has already said has been pretty frustrating, again, for the victims. I mean, these victims asked to go to the White House when he signed the bill in recognition from the White House and the president that they were indeed victimized. Instead, he did it in the middle of the night. And then he politicized it, focusing on the Democrats who were perpetrators. And certainly there are enough of those. So I can't imagine he's going to say anything that will satisfy the people who have pushed for so long and so hard to get these out, that's going to satisfy them. I think what there is a concern about is that he's going to try to counter program this by saying something outrageous or doing something outrageous. you're hard pressed to know. But it is quite a Friday night that he's speaking at 9 p.m. And at this point, it looks like we may not even get this document done until around that time.
Well, they could wait till he's off the stage, I suppose, too. And I can't imagine he's going to be gaggling with reporters after the fact. There aren't going to be any binders released today, it looks like, Lisa, but it could, in fact, take the weekend, to your point, for any real news to come out here. That could be confusing for some people as well. But as a communications expert in our last moment, I wonder, for the RNC, which you used to speak for, or the administration, do they need to have a deliberate response prepared for when this breaks?
Ordinarily, yes. That would be exactly what we would be doing and preparing. I'm reflecting on this week alone, Joe. The president himself said some pretty unpopular and unsympathetic things about a horrible, horrible tragedy that happened in California. And 2 days later, a very revealing report came through from Vanity Fair. So this administration is really good at dodging all of that kind of information over and over again.
Pretty amazing to see Susie Wiles tell Vanity Fair she's read the documents. Trump's name is in them, but there was no illegal activity. Jeannie Shanzano, Lisa Camuso-Miller, great panel. Thank you both for your insights as we wait for the files to drop. This is Bloomberg.
Thank you.